Hello everyone, welcome to today's video. I hope you are good. I think there's a big drop coming in Bitcoin. I'm going to explain why. So welcome, obviously hit that bell button if you are subscribing, it helps. Like button, comment. Also comment if you want another lesson. Let me know what you want. I did a lesson yesterday on the fibs. If you want to know something else, just ask a question and I might do it for you. So on the screen you've got here, Bitcoin hash rate drops 45% since 2020, the start of 2020 obviously. So let's read through this. Now, I think this is a massive bearish sign, and I'm going to explain in more detail. So the hash rate has taken a steep plummet, and I'll show you the chart in a sec, from its peak in 2020. So 45% is a big, massive drop. So in terms of its sinking, it's a big issue in terms of the rate that, you know, the market has been used in terms of difficulty and kind of the use case of cryptocurrency, Bitcoin, as a network. So what it is, it's a parameter that gives the measure of numbers, a calculation that given across the network over each given second. So every single transaction, all kinds of good stuff like that. Now, the higher the rate means a greater competition for miners to validate and verify the new blocks when they're doing every 10 minutes a new block, do every single time, right? So this is increasing, you know, the number of resources needed to perform a 51% attack, making the network more secure. That is when it's higher. So when it's higher, we're at a more secure level. Now, it also means higher the level, more, wait for it, the cost of Bitcoin is to mine. Now, this is where the important thing comes in, where I'm thinking in my head, dumpage. So when you start to consider that miners are making money by selling their Bitcoin for profit, right? So they wouldn't mine it any other way. So when you think, if the difficulty adjustment and the hash rate is coming down, which is a key thing there, remember the word there, down, it's more profitable as it stands. So it's cheaper to make, or create a Bitcoin, or mine a Bitcoin, whatever you want to label it as. Therefore, they're selling at the $6,000, $7,000 range for profit. Now, in the end of April, i.e. a month from now, 47 days, I think, something like that, Bitcoin supply in halving is going to happen. So the amount that the miners will get will go all the way down to 6.5, which is interesting. So what's going to happen? My opinion is, I think there's going to be a sell-off. I think miners are going to sell, they're going to come back away from it a little bit, and they're going to wait for the price to drop. What they're going to do is they're going to sell these profitable Bitcoins that they're getting more of, i.e. up until the next couple, 40 odd days time when it will halve. They'll sit on their assets and then they'll go from there. I think that's going to definitely happen in terms of, it's obvious, isn't it? They're going to sell what is profitable now and stack. They're going to keep them. So when you look at that, when you consider that bit of data as fundamentals, it's kind of key to know that 45% drop is huge. Now, this is another article that kind of like, I don't think this is right. Minor difficulty just recorded, right? The second biggest drop in the crypto history, right? That's interesting. But this may be the perfect time for people to jump back in. I don't think that is. I think they'll be the opposite way around. I think they'll wait. And if they do wait, they might wait for the difficulty adjustment to go even lower to then take advantage of the 2-week difficulty adjustment. So they've got a 2-week run to collect a load of Bitcoins at its lowest and then be able to sell for profit if the price is still right. But this is where the difference comes in the future of halving and the stock flow ratio of the cost. Bitcoin has to be a high price for these miners to be profitable. If this difficulty adjustment does drop and it keeps dropping, obviously they'll still be profitable because it's costing less for them to mine. There's less mathematical data that needs to be used to do the verifying of the blocks. So with that in mind, you got to think what happens in the future when the network's used more, there's more people on the network, and that's really high. The price has to be high as well. So it's very, very interesting to know. And I do think that there's definitely going to be an increase in selling off here. So you got to look at how this all works. But this article is a bit different. It's like the other end, the other side of the coin, where miners should really jump in now to get the difficulty high. But I'm thinking that there's going to be one big massive sell-off before halving to allow miners to sell a load of profit, to be able to stockpile so they can carry on running when the difficulty adjustment drops low enough and the price also drops with it, which is kind of key on how they stay in business. So that's my overall thoughts on that. It's a huge decrease, and again, if you look at the hash rate, it's big. This is a big drop off. Look at this from this point here up to here. It's huge. You know, obviously we could go lower. It's already predicted that in the next 2 weeks time or whatever it is, whenever it's calculated, I think it's in 2 weeks time, there'll be another 16% drop. So that could lead to a bloody 60% drop from the highs of 2020. So it's key. So when you look at the chart though, when you're looking at potential areas where we could drop and we could fall down from, remember, this 6K region is always key. It's always a key region of where miners can make or break essentially the network. And when you consider that it's usually profitable between $6,000, $5,000 and $4,000, depending on the country that you're living in, it's kind of interesting. So if we go below $4,000, miners technically will be relying on their previous bags that they've kept to keep in business, but also the difficulty in that network being low, but also it would be slow as well because there'd be less miners on the network. So it's very, very interesting to make note of that. But what I'm thinking overall long term, and I know people don't like my bearish thoughts and my bearish tendencies, but I am thinking we're going to go into this region here of like literally between 1,750 region and $2,000. This region looks like a definite area of interest. So I'll be very, very mindful if you're looking to invest in Bitcoin right now. I think it's a very, very topsy-turvy time, especially when you put into consideration that mining algorithm is definitely plummeting. That could lead to a massive sell-off in miners. So that's kind of all I've got today, realistically. So it's a nice short, sweet video compared to yesterday. I know yesterday's video was really long and it was a lesson, but if you do want to learn something new, I will do another lesson. I'm going to do 4 more free lessons for you guys, just anything you want. If you want to know about risk management, how to spot scams, all kinds of good stuff, I'll crack on and do it. So see you again very, very soon.